I'm with Bruce Wan, Head of Research at MaxCap Group. Bruce, welcome to the Inside Network's Income and Defensive Assets Symposium.
Thank you. Very good to be here.
Now, Bruce, we've seen interest in private credit grow substantially over the last 5 years. What do you think that is?
Look, private credit, topic of the day. It's been very popular, mainly for one prime reason. So the best risk-adjusted returns we're seeing right now. Over the last couple of years, we've seen a lot of volatility, a lot of drawdowns in things like equity, bonds and real estate. And in contrast, we're seeing a lot of resilience in returns for private credit. And that's been a key factor for people looking for a little bit more substance and resilience in their portfolio, especially over the last couple of years.
Now, income generation is a core concern of retirees. For advisors working with clients in this stage of life, what do you see as realistic target in terms of both yield and regularity in this space?
As you can imagine, when you sort of write these loans and you lend out money, a lot of that is sort of hitched to the floating cash rate. So, as most of you know, it's gone up quite substantially. Where we set expectations for sort of some of the lending returns and the like, for first mortgage, the first to be paid, the senior loan and the like, we probably set the expectation about cash plus 5%. So cash currently 4.35 plus 5, you're looking at about 9-ish. For some of the more junior loans, we are looking at a return target about cash plus 8. So again, 4 plus 8 gives you a sort of a double-digit 12% return as well. So people finding that very attractive given all the challenges we're seeing in real estate markets and equity markets and the like.
Certainly attractive for a defensive asset. Alongside generating income, the secondary and linked concern of clients is to protect their capital. What risks do investors need to navigate when allocating to private credit?
Oh, look, manager selection is probably one of the big ones. We've heard today in the conference, a lot more new players coming through. They don't come through with the same degree of experience or infrastructure and sort of support system. They don't have their own sort of quantity surveyors, internal valuers or researchers to sort of support that function as well. So all of that needs to be sort of a focus for people looking at manager selection. So look for someone with a very long and successful track record like MaxCap. Look for someone who's got the infrastructure to mitigate a lot of the risks that we see in the sector as well. So these are the main challenges for people looking freshly into this particular area.
And what role does diversification play in supporting risk management?
Look, there's probably two layers to that diversification story. There's one, asset class diversification. Last couple of years, we've seen much higher degree of correlation between stocks and bonds and other things as well. So people are looking further and wider in terms of, what can diversify their traditional portfolio. And a lot of people have been drawn into sort of private credit as a result, which is still very lowly correlated to portfolio returns and individual asset classes as well. The second element to that is just diversification across assets as well. You can be writing one individual loan, but you'll be committing to a very sort of a specific income profile. But if you're saying you're investing in a fund that is diversified across 50 loans, and the typical loan term is 2 years, on average, on a monthly basis, you're writing 2 new fresh loans, you're closing out 2 loans as well, and you're getting very much more stable income profile because of that turnover in that sort of repayment profile as well. So investors need to do both at the asset class level and also at the individual asset level as well.
Last question, Bruce. What do you think could be the biggest surprise for markets as we move into the back half of 2024?
Wow, that's a big question. And a lot of things pop to mind. There's a US election going on. There's sort of still a lot of troubles in Europe and other places. But by and large, those are very far away events, and they don't have the same sort of direct bearing on Australian markets as other things would. And those other things might include things like local inflation, local interest rate profile. While we're seeing a lot of central banks now cutting interest rates, we in Australia are still sort of umming and ahhing as to whether this is the last interest rate increase from the Reserve Bank as well. We'll get more clarity on that over the next 6 months. We don't have that clarity today. So, that will be one of the biggest drivers in terms of what happens to inflation and what happens to cash rates over the next couple of months as well. That'll be interesting to watch.
Indeed. Bruce Wan, thanks for joining us.
Thank you.